JSE Safex style options, a great choice.
Welcome back to Wealth and Wisdom. We're with Mike Brown learning about ETFs. So Mike, just before the break, we were talking about these geared ETFs sort of not really being catered for under the current CISCA Collective Investment Schemes Act. So mostly they're just holding a basket of shares for you. But there are some other ways you could maybe gear your portfolio. You could gear some ETFs.
Yes, I mean that's not particularly popular in South Africa, but what we've got is ETNs, exchange traded notes. And what exchange traded note is, the JSE allows you to list products where it's difficult to hold the underlying. So you can buy an ETF, for instance, on oil or on maize or on gold or silver or platinum. Now, how do you store that oil physically? You know, you can't go and stick it in the chairman's parking lot because it's going to go off, or maize will go frot after a while. So JSE allows you to run an ETN by using a futures contract as the underlying. But it then insists that whoever issues that ETN guarantees has an obligation to provide the performance of whatever it's
the asset class.
He has that obligation to provide the total performance of whatever asset he's tracking. And so when you're buying an ETN, you're buying the creditworthiness who issues that ETN. And in South Africa's case, the JSE's only allowed the big banks, ABSA, Standard Bank, and First Rand through RMB to issue ETNs.
So that's the difference between an ETN and an ETF.
Yeah.
An ETN has that credit risk because they're investing in something that's a little bit less certain, whereas an ETF, they've got the actual shares. So they've got that claim, they've got a basket of shares. If they went into liquidation, it's in a bankruptcy remote trust, and I mean, those shares are there. So
an ETF is held, the shares are physically held by an independent trustee, and the trustee matches every day to make sure there's enough shares to meet the obligation, how many ETF securities are in issue. So the ETF structure, just like a unit trust structure, is very safe.
Yeah.
It has an underlying trustee structure and independence and all that sort of stuff. An ETN is equally safe because it has somebody guaranteeing the performance.
Exactly.
But you've got to take on the creditworthiness whoever's doing that. So both products are quite safe in their own way, because you can't stop the market going up or down.
Exactly.
But the structure is relatively safe. So one way of getting into products which otherwise you wouldn't be able to access, like currencies and commodities, is to buy ETNs, exchange traded notes. And that's opened up a whole new sector of investment in South Africa.
But on those, the JSE also then has futures. I mean, we have futures on ETFs as well, so you could trade a future on the Satrix 40 or a future on the ALSI, which will then be a geared exposure to the benchmark.
There are some single stock futures where, internationally, and I think we're a little bit ahead of South Africa in this. If you're going to take a view on the market, and let's say you're doing a trade and you're saying, well, I want to go short the market and go long the currency or something, you typically wouldn't pick one share because something could go wrong in that share that day. You'd rather buy an index, because then there's 50 shares or 100 shares or 500 shares in an index. So if one company doesn't do well, well, the other 499 will help you. So typically internationally, a lot of the day-to-day trading is done in ETFs and matching them against futures. South Africa hasn't got that liquidity yet, but you can effectively buy, if you go to a broker, he'll offer you a single stock future or a CFD on an index like a Satrix 40, but that's an over-the-counter product. Though the JSE does allow for warrants and options to be done on that. That's quite a technical business. You really need to be a derivatives trader or day-to-day trader. The average guy on the street just wants to buy an ETF to say,
it's more a savings product.
I want to put it's a savings product.
It's a savings product. It's not really, you're not speculating in ETFs. You know, what's quite interesting though is they do have a lot of ETFs they're speculating in the States. You know, sector rotation and stuff, where they sort of, let's go long the oil sector and short the healthcare sector because of X, Y, and Z. So they'll trade in the ETF sector. Whereas in South Africa, it's more still an investment product.
It's very much an investment product. It's a savings product. That's what you're trying to do, because the savings rate's so low in South Africa, so try to get people to save. Now, if you put money away into one or two ETFs over a 5-10 year period, you won't believe how much it's worth at the end of that period. And that's what you want to get, is people becoming regular investors, putting money away on a regular basis. If they've got a bit of money at the end of the year, they've got a bonus, put some of it into an ETF or into savings.
Little bit of it.
And if you've got an account open, people will do that. We find that the big part of our business on ETFSA is just repeat business. It's just guys who've already got an account adding additional ETFs or putting additional money in.
Because they're so happy with how it's going.
They're happy with the product, the products have been performing very well. I mean, that's the one thing that's been very nice about ETFs in South Africa, is you had great historic performance. There's no guarantee that'll happen in the future, but it's been very good in the past.
So I mean, the worry with an ETF, though, is that there could be some tracking error, that the guy doesn't quite get the benchmark.
There's very little tracking error. It's quite, most ETFs on liquid shares. if you've got to create new baskets and you're trying to buy shares that are illiquid, then there might be a
you
problem.
can get in trouble.
But if
These big liquid things,
most of your indices are liquid shares, so there's very little tracking error. The tracking error is really quite low in the South African, and most ETFs, there's quite low tracking error. So wouldn't worry about that. But what you've still got to do is you've got to take into mind that the markets go up and down, and the way to get around that is just keep on investing, because over time the market recovers.
It recovers.
Everybody said 2009. What's going to happen? Will the all-share index and the top 40 index and the industrial index
went right
past
down
their
to
previous peak
16,000
in the last couple of months? So anybody sat there and held their investments is now back to where they were. In fact, hopefully now they'll start gaining on in real terms going forward.
So it's a really interesting approach. Thanks, Mike.
Yeah,
that's
a pleasure to
so
be here.
interesting. Thanks very much for watching. So now you've learned about ETFs, exchange traded funds, a very interesting, cheap way of gaining access to the whole market, or a wider exposure than you could with one simple trade or a simple debit order once a month. You can invest in bonds through ETFs, you can invest in property indices through ETFs, you can invest in the best dividend paying stocks. In fact, there are 57 different ETFs now trading in South Africa. So definitely a worthwhile investment product to look at. Thanks for watching. Wealth and Wisdom.
Wealth and Wisdom was brought to you by the Johannesburg Stock Exchange.